Hey, my name's James Nicholson and welcome to my YouTube channel. Now, this channel is all about documenting my journey as a property investor. I'm currently expanding my portfolio, but more interesting to you, I'm building a portfolio for my two daughters. Georgia, who is 21, we just bought our first two properties, which you can see on this video, on this channel already, and Emily, who's 1. We're building both of them a property portfolio, and I'd love you to join us on a journey and find out the good, the bad, and the ugly about property investing. So do that by smashing that subscribe button and hitting the bell notification. Now, I want to talk to you today about inflation and what does that mean for property investors? Is it something that we should be scared of? After all, everyone's seeing in the news at the moment, the gas prices or fuel prices are going through the roof. The cost of heating your home or turning your lights on is going up, and food and drink at the supermarket have been rising significantly as well. So what that means is that the money in your pocket is not worth as much as it was just a few months ago. Now, inflation is really going to be running at around 10% by the end of this year. And the goal of the Bank of England is to control that inflation, and they want inflation to be at just 2%. Now, we're wildly off that, and they must do something to make sure that we don't have spiraling inflation for a long period of time. Now, what they would normally do is raise the interest rates. That's happening, and it isn't really having much impact on inflation at this point. And so the Bank of England will meet every single month. They've already said that very clearly they are going to keep raising interest rates through 2022 in order to curb the inflation. Now, the difficulty they've got is they're trying to ensure that the UK also doesn't go into a recession, which we've already just had a negative quarter of growth. If you get 2 of those in a row, you're officially in a recession. And so it's a fine balancing act. On top of that, the government owes more money than ever before. And so by printing all this money that they did, that's what caused the inflation, but they also have to pay it back. The government has got a significant amount of debt to pay back. So they don't want the interest rates to rise significantly either. So what will happen, and will that have an impact on property investors? Well, if you look at the markets, as in the stock market, in the last few days, that's been very negative, and the crypto market this year has been very, very negative. In fact, Bitcoin is worth half what it was 6 months ago. Now, other coins have gone to zero, and what that means is that crypto investors, some of them, are scared of that market now and looking for other places to invest. Same with the stock market. Now, stock market is volatile. Potentially it's in bear market territory, and that could continue to go down. And normally you don't see the stock market and the property market go down at the same time. So what happens is people readjust. They move money from one asset class and move it into another asset class. And so the property market could potentially just stabilize now, but also it could go down as well. And so with the interest rates going up, that means mortgage payments are going to be more expensive, and so less people are going to be looking for property. Now, at this point in the market, we still have more buyers than we do sellers, and so until that changes, which could happen by the end of the year, I don't think the market in property is going to go down too much. However, as an investor and with inflation, property is a good asset class to be in when there's high inflation. And I'm going to explain that to you here. So when you borrow money, let's just say you borrow £100,000, right? Now, normally what we would do is have a 25-year mortgage. And so every year, inflation is targeted at 2%, which the UK roughly hits. And so at the end of the period of time, what we're banking on, and this has happened forever in history, is that this 100 grand is not really worth much. Because if you think about it, I bought my first property for 45 grand and now it's worth £250,000. It's gone up 5 times. And so what we're hoping is that the money is not worth as much. And so we could, so let's just say in 20 years, this property should be worth 400 grand, right? if property does what it has done since 1066, and that's double every 10 years. So that means in 10 years it'll be worth 200, another 10 years that will be worth 400 grand. Now we then need to pay this money back, but because inflation's gone through the roof or just continued as normal at 2%, that means that the value is now 400. Now here's our option. We could get a new mortgage out, right, and just keep that loan at £100,000 and put it on for another 20 years if we chose. Or we could sell this property and we could pay off this 100 grand and theoretically keep 300 grand before tax, right? Now, depending on how that property was structured, you might have some tax to pay on that, but still you would make a lot of money. Now, here's the thing, what's happening at the moment. Now, inflation's really growing at the moment, and we're saying possibly we're looking at 10% inflation this year. So this kind of means that this debt, without us paying anything back, has been eroded. So if you're a property investor, the best scenario at the moment is that you have lots of debt, because the more debt you have, that debt is becoming less and less valuable each and every year. So let's just say that this 100 grand, inflation sticks at 10%. In real world terms, although we have to actually pay back 100 grand eventually, but in real world terms, that 100 grand's buying power in a year from now is only going to be 90, right? And so that's a good thing. And so when we pay that back, yes, our petrol is going to be more expensive, and fuel and all of these things are going to be more expensive as an investor. But the debt, which is a bigger chunk, like I'm not spending 100 grand on like groceries and stuff like that. I'm sure you're not too. So our debt is being eroded faster by inflation, and that is a good thing for property investors. Now, the other thing is if the interest rates go up, right? So they're putting the interest rates to curb that. That means the market could drop. And so does that mean that we should wait and to buy at the drop? Well, probably not, because here's the thing, right? If you find a good deal today, it's still a good deal. And if you wait until the market drops, the interest rates might be higher. And so your monthly mortgage payment could be the same as if you bought today, or even more because the interest rates have gone up. Then you're making less cash flow. So as an investor, I'm really just looking at what are my monthly mortgage payments, right? That's really important to me comparative to the rent that I achieve on that property. And that split in the middle is my profit. And so I want that split to be as big as possible. So if I wait for a year thinking, yeah, the market's going to go down, but the interest rates have gone up to 2% as a base rate, then it's not quite as good a deal for me. I might be paying back more money than if I just did the deal today at a higher property price. Now, as an investor as well, I'm always looking to buy and hold. Some people flip houses and stuff like that, and that's good. But in a market where you've got high inflation, uncertainty with property, uncertainty with interest rates, flipping can be that little bit more dangerous. And so my strategy is always to buy, hold that property. Yes, the market could correct next year and it might drop 10%. I don't know, you don't know, no one has a crystal ball. But what I do know, that even if it did drop by 10% next year, I'm not too concerned about that, because I'm not looking to sell. And I know in 10 years from now, whether it dropped 30%, there's a high probability from history of since 1066 that the property, if I bought it for 100 grand today, in 10 years from now, it would be worth £200,000. That's happened again and again and again. And inflation is the cause of that. So there's a high chance that that will happen. Does that make sense to you guys? I hope so. But inflation, yes, some places it's not good. Property investing, your debt's getting cheaper. That's a good thing. So I think that's positive for you guys. There's pros and cons in everything that happens. So I'd love to know your thoughts about that. Do comment below and do join us in our Facebook group. We've just launched a new free Facebook group. You can join us in the description of this video. Do subscribe, as I said, join us on this journey. See all the deals that we're doing, the good, the bad and the ugly. And that's the only way to find out. And go and check out the other videos. I've just made a video on why you should not pay off your mortgage. And that's a really interesting one, very controversial. Go and check that out here. And I'll see you guys in the next video. Bye for now.